Imagine waking up on the 1st of every month, checking your bank account, and seeing a direct deposit of $4,000. No strings attached, just guaranteed financial security. It sounds like a dream, right? But how realistic is it? Today, we're going to break down Universal Basic Income, or UBI. UBI is often talked about as a lifeline in the age of AI, a way to support people as jobs become automated. But when you move from theory to reality, you hit a massive wall: the cost. How do you pay for it? Supporters often point to two ideas: raise taxes on the wealthy, or just print more money. But a close look at the economic data shows that under our current system, the US government simply can't afford a program this massive without risking a total collapse. However, there's another way this could work, and it has nothing to do with traditional government spending. By the end of this video, I'll explain why UBI might become not just possible, but necessary, thanks to how big companies create value. This brings us to a concept called the corporate automation dividend. Think about it. As AI and robotics become as productive as humans, company labor costs plummet while their output skyrockets. Our entire tax system is built on people earning wages. So, when a company replaces a human worker with an algorithm, the government loses that income tax revenue. Meanwhile, the corporation's profits soar. This is why influential figures like Sam Altman and Bill Gates have proposed ideas like a robot tax or an equity model. In this system, companies would contribute a portion of their value or profits into a national fund, kind of like a sovereign wealth fund. This isn't just a fantasia. Real-world example already exists. The Alaska Permanent Fund pays every citizen an annual dividend from the state's oil revenues. In a future economy, automation and data become the new oil. If corporations pay dividends to the public based on the value created by their automation, UBI is no longer a handout funded by taxpayers. Instead, it becomes a share of the profits from our collective technological progress. It's a return on efficiency. Now, let's look at the staggering numbers. The US labor force is about 164 million people. A $4,000 monthly UBI comes out to $48,000 per person each year. If you multiply that across the entire workforce, you get a mind-boggling figure: $7.87 trillion annually. To put that in perspective, the entire projected US federal budget for 2026 is around $7 trillion, with tax revenues expected to be about $5 trillion. So, a UBI of this size would cost more than the entire federal government. To fund it the old-fashioned way, you'd have to scrap everything's Social Security, the military, Medicare, all of it, and you'd still have a massive deficit. Trying to cover it by printing money would almost certainly trigger hyperinflation, making the dollar worthless. From a traditional budget standpoint, it's completely impossible. But the corporate automation dividend changes the equation. It reframes UBI not as a government expense, but as a direct share in corporate productivity gains. Instead of taxes flowing to the government and then being redistributed, value flows from automated corporations directly to the people. This isn't just about giving people money, it's about redesigning our economic system for a world where human labor is no longer the main engine of value creation. It acknowledges that the wealth generated by AI and automation belongs, at least in part, to everyone. So, what do you think? Is this a realistic path forward? Could we transition to a dividend-based economy in our lifetime? Or are these numbers just too massive to overcome? I'd love to hear your thoughts in the comments below. Let's get a conversation going. And if you enjoyed this analysis, don't forget to subscribe for more deep dives into the future of our economy. Thanks for watching.